Hi there, welcome to Nepi Invest. Continuing on in my Appendix 4C September quarter video series, I'll be looking at another company that was operational cash flow positive for the September quarter, and that company is Ansarada. I don't think there are a lot of people, or a lot of investors out there know about this company. They have only been around for about 10 months. Another company on the ASX did acquire Ansarada and then change the name. But I'll talk about that later in this video. For full disclosure purposes, I am a shareholder of this company. Two reasons why I decided to buy into Ansarada. The first reason is they are operational cash flow positive and growing. And the second reason was because of technical signal. We did see the share price move into an uptrend, and that uptrend has continued over the past 4 or 5 months. You'll be able to see that when we look at the chart later in this video. So before we look at the Appendix 4C for the September quarter, let's talk about what this company does. Ansarada is all about virtual data room technology, and you might be thinking to yourself, aloud or not, what does all that mean? What is a virtual data room, and why is there a need for this technology? And it all goes back to 2005 when there were two accountants, a software guy, and maybe some other people who were involved in a merger or acquisition, and they came to the realization or the frustration that getting all the data in regards to this data or this merger acquisition was really hard, because when you have a merger acquisition and you've got all these parties involved, there needs to be some sort of way where you can get all parties or both companies or multiple companies to get access to all that data from the other company. And that's what a virtual data room is. It's a secure online repository for document storage and distribution, typically utilized during the due diligence process preceding a merger or acquisition. A virtual data room is also known as a deal room because it's involved in that merger or acquisition process. Ansarada was founded in that year because of the frustration involved in that particular merger acquisition. There's two accountants, software guy, maybe some other people, and it listed on the ASX the 9th of December 2020 via the Dockyard, which was an ASX listed company at that point in time. So when you read the announcements, the Dockyard actually acquired 100% of Ansarada. But the way I look at this was a backdoor listing. Ansarada was the bigger company, and the Dockyard was a small company, sort of a shell at that point in time. And when they made this acquisition, the people involved with Ansarada sort of took over the board of the Dockyard. The CEO and co-founder of Ansarada is Sam Riley. He has a 5.6% stake in the company. And the other shareholders, Andrew Slavin, probably one of the other co-founders, has 7.4% stake. And NetWealth, the large fund in Australia, recently IPO'd maybe a few years ago, has 4.8%. The market cap of Ansarada, 171 million at $1.93. And the TIG code of this company is AND, A-N-D. One of the things that did hold me back potentially from buying into Ansarada, and it didn't completely hold me back because I eventually did take a position in the company, was just the lack of growth in revenue from financial year 20 to 21. Revenue grew from 32.9 million to 33.1 million. That was a little bit of concern because I do like to see revenue growing for a company through time. But operational cash flow did grow from 4.6 million to 6.5 million. And if you take away some of the one-off costs, in fact, the operational cash flow was approaching $10 million. And when I'm talking about the one-off costs were because of the backdoor listing, and they did have to spend a little bit of money on that. And don't really look at the profit after tax. In 2020, they lost $26 million, and they're only profitable this year by $640,000. They do, because of accounting reasons, there's a lot of money spent in depreciation and amortization. And when you take away that, this company was a little bit more profitable than they show it in their financial numbers. Gross profit. So if you watch any of my videos on mining services company, engineering services company, I always talk about there's very low margins in those sort of companies. For Ansarada, gross profit margins have increased from 92% to 96.5%. So these sort of companies, these software companies, have very high margins, and that's why a lot of times you will see a bit of a premium applied to the share price of these companies or the value of these companies. $22.6 million of net cash, and because they don't have any debt, the enterprise value is much lower than the market cap. And when you calculate some of the valuation metrics, enterprise valued operating cash flow, 22.8. That does seem a little bit high, but if you take into account those one-off costs, it's more like about 15, and that's not too high for a company that looks like it will be growing in the future, and it is a software company. Price to sales ratio, not too high, 5.2. Sometimes if I see that price to sales ratio exceeding 10, getting towards 15 or 20, that's when I take a further look at and see whether the company is a little bit overvalued. A price to sales ratio of 5.2 for this sort of company is not too stretched at all. Now, let's have a look at the June quarter and the September quarter Appendix 4Cs for Ansarada. First one here is the June quarter. And the reason I want to have a look at 2 quarters is just to see how the company does progress. We'll also have a look at the cash receipts history, fairly small sample size because this company has only been on the ASX as Ansarada for about 1 year or maybe 4 quarters. Receipts to customers, $11.1 million for the June quarter, and they were operational cash flow positive by $2.6 million. And a lot of that does go down to the bottom line because they don't spend a lot of money on investing and what's the other one? Investing and financing activities. So that means the cash on hand actually did increase from $21.7 million to $22.6 million. Now let's have a look at the September quarter to see if things have actually improved a little bit for this company. And to be fair, as a shareholder, you could argue that September quarter numbers were a little bit disappointing because receipts to customers did rise, but it rose by only $400,000. And even though they are still operational cash flow positive, it's only $2.5 million. But if you bring that forward and assume that's sort of the cash flow they will receive quarter on quarter, you could maybe argue that the cash flow for this company will be about $10 million for the financial year. They did spend about $1 million on intellectual property and $500,000 on non-current assets. I'm not sure what that means, but overall, the cash on hand did increase from $22.6 million to $23 million. I do like the fact this company does have a fair bit of cash on hand because it does give management a bit of flexibility in the future. They could go down the acquisition route. They could go down the share buyback route that another company did, AIM, AI Media, which I'm not sure why they did that. But a lot of flexibility is open up to management when they have a lot of cash on hand to play with. Typically, I like to see at least 8 quarters or 2 years of receipts to be confident enough to determine whether the cash receipts are growing through time. With Ansarada, we only have 4 quarters of history because they did list on the ASX as Ansarada back in December of last year. So they've only been on the ASX for 10 months, which equates to 4 quarters. But even though this is a small sample size, receipts have grown from 9.4 million to 11.5 million, albeit fairly slow, but it is growth. I don't mind if receipts grow slowly if it's a consistent growth in receipts over time. And that's exactly what Ansarada are doing right now. They are growing receipts. And that is an attractive thing for me when I figure out whether to buy into a company or not. One of the reasons I decided to take a position in Ansarada was a shift in sentiment in July of this year, which did coincide with the release of their June quarter results. This is the daily chart for Ansarada going back to December last year when the Dockyard made the acquisition of this company and transformed from the Dockyard to Ansarada. And there was actually a bit of negative sentiment from when Ansarada listed, and the share price was around about $1.40 to $1.45. And the share price fell from that $1.45 all the way down to less than $1 in April of this year. But the sentiment did shift in July of this year at around about $1.25, and we have seen the share price continue to grow from there. There was a brief period between about August and October of this year when the share price looked like it was struggling. We did see share price pull back from $1.75 to $1.37, but they made an acquisition, and it seems like the market really liked that acquisition because over the past few weeks, the share price has risen from about $1.40 to a current share price of $1.90. So still a lot of positive sentiment in this company. The share price is at an all-time high for Ansarada. Always like to see that. And the other thing I like to see is a bit of an increase in volume. We haven't seen a massive increase in volume, but around the time they did make that acquisition, when the share price reached that low, we did see a bit of a spike in volume during that period. So it does look like the market has become a little bit more interested in Ansarada over the past 2 weeks. And that is exciting for me because that means there is potentially some fund managers taking a closer look at this company. And one of the major reasons a company like Ansarada can grow its share price is when fund managers start taking a position, a more significant position in this company. Because something like 80 to 90% of action on the ASX is because of fund managers. Only about 10% of trading is because of retail investors. So you want to see fund managers take positions in companies that you do own because they can or are the ones who drive the share price higher. That is all I have for this Appendix 4C September quarter video for Ansarada. Again, for full disclosure purposes, I am a shareholder of this company. If you do have any questions about Ansarada or any other company on the ASX, please leave your thoughts, your questions, your opinions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need to seek financial advice, make sure you find someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.